The market is always buzzing with new stock ideas, but which ones are actually worth your attention? Today, we're cutting through the noise to spotlight some of the most talked about companies: Novo-Nordisk, Whirlpool, Spotify, and more. I'll break down what's driving each stock, highlight key risks and rewards, and share what analysts are saying. This isn't a buy or sell list. Think of it as your launchpad for deeper research. Ultimately, your investment decisions are yours alone, so use this as a framework to start your own due diligence. Let's dive into our first stock. First up, Novo-Nordisk, ticker NVO, a pharmaceutical powerhouse behind Ozempic and Wegovy, two drugs that have transformed the weight loss market and become household names almost overnight. These medications have not only changed the way doctors treat obesity and diabetes, but have also sparked a cultural conversation about health and wellness. Their stock has soared, fueled by surging demand and global expansion, making Novo-Nordisk Europe's most valuable company at times. Investors have taken notice as the company's market cap has reached new heights, reflecting both optimism and excitement about its future prospects. The obesity and diabetes treatment market is massive and still growing, with millions of new patients each year. Novo's first-mover advantage is significant, giving it a strong foothold in a sector that's expected to expand for decades as global health trends evolve. They're also researching new uses for their drugs, including potential applications in heart disease and other metabolic conditions, which could unlock even more growth and diversify their revenue streams. But competition is heating up. Eli Lilly's Zepbound and Mounjaro are strong rivals, and more companies are entering the space, eager to capture a share of this lucrative market. This could mean price wars, increased marketing costs, and potentially slower growth ahead as the battle for market share intensifies. Analysts are mostly bullish, citing Novo's leadership, innovative pipeline, and the expanding market, but many warn the stock is expensive and may be pricing in a lot of future success already. The price-to-earnings ratio is high, so a lot of future growth is already baked in, leaving less room for error if things don't go as planned. Any stumble, like production issues, regulatory setbacks, or a competitor's breakthrough, could trigger a sharp pullback and rattle investor confidence. If you believe in the long-term potential of weight loss drugs and Novo's ability to stay ahead of the curve, paying a premium might make sense for your portfolio. But if you're a value investor, you may want to wait for a better entry point, especially given the current lofty valuation. The current price leaves little margin for error, so caution is warranted for those seeking a wider safety net. Novo-Nordisk is a phenomenal business, but patience could pay off if you're looking for a safer entry or waiting for a market dip. Watch for pullbacks or market corrections as potential opportunities to buy into